After being in this business for 32 years now, I've come to a conclusion that our industry has done you wrong. That much advice that you are getting is not getting you where you need to be, not getting you informed enough, and it may be costing you the opportunity to retire in the manner that you like. In this video, I want to share with you 7 areas where I believe we have not given you proper advice and how you can be more aware of some of those items to put yourself in a better position for the next chapter of life. Hi, my name is Mark Singer and I'm founder of the Your Retirement channel. Before we go on any further, please subscribe to our channel and hit the notifications bell so you can be alerted to when we post new videos. Now, I want to be honest with you. Not everyone in our industry who's delivering advice to you is doing a bad job. I think there are many advisors who are doing what they should be doing. But I have had so many conversations with people who have come into my office or I've talked over the phone. I'm going, really? Are you kidding me? That's the advice that you got? And even for some who haven't worked with advisors, and here again, our industry needs to do a better job of informing you and educating you. Let me just give you one example. 3 or 4 years ago, I had somebody come in who had not worked with a financial advisor before and had his accounts with Fidelity, and at the time he's claimed that he was getting about a 7% return on his investments. And when I asked him how much income he was going to take from his portfolio, he said, I'm going to take 7%. I'm like, oh my goodness, we have to get back to square and tell you that you can't do that. So let me get started with some of the areas you need to be more aware of and why the answer he gave me was going to probably blow up his retirement. So the first of the 7 questions is, should I be investing any differently now that I'm entering into retirement than during my working years? Or better yet, let me rephrase that, how much risk should I be taking? So let me start with sharing with you really the 2 different phases of financial planning. The first is the accumulation phase, where during your working years, the goal is to accumulate as much money as possible. And during those years, it's actually okay to take on more risk because you have time on your side. If you make mistakes, you can overcome them down the road because you're not into retirement. But when you go into retirement, you move into what they call the distribution phase. And that's where we live, where we really talk about how to take on the proper amount of risk with the portfolio to now generate the income that you're going to need. Because you see, it's now no longer about growing the portfolio as much as you can as it is generating the income you need. So here's a question for you. Do you think you're better off to take more risk than you should or less risk? And I've seen this in both ways. I've seen people who have come in and they've said, I don't really care. I'm all in the market. But when the market then goes down 30 or 40%, like we've seen on more than one occasion in the last 20 years, it can have a disastrous impact on your retirement. And on the other hand, it's interesting, as dangerous is putting your money under the mattress, because then you get no growth. And how do you overcome inflation and taxes and taking out income when you have no growth on the portfolio? So the answer is there needs to be some degree of risk. And the way we put it to our clients is you really need to take the least amount of risk necessary in order to generate the income that you're going to need. Let me go to another area here when it comes to investment and risk, because this just happened just a couple of weeks ago in my office with a new client. And I asked him, I said, what kind of investor are you? And he said, very conservative. And then when I looked at his 401ks and his IRAs, oh my goodness, he was 97% invested in the stock market. He didn't even know that what he was invested in. And here he is thinking he's being very cautious. And the market, with all of its volatility, as he's approaching retirement, is in the wrong place for him, not only for his goals, but they're not even in alignment with how he thinks about it. And again, getting back to our industry, we need to give you a better sense of how to think about it and how to benchmark it. Question number 2 is, and it's the number one fear retirees have, will I run out of money? Will I have enough income for the rest of my life? So let's go back to the story I just shared with you with the fellow who came over who was dealing with it on his own from Fidelity and said, I'm generating a 7% return. I'm going to take 7%. Let me share with you the industry studies that we need to get more out to you, okay? From the studies that we have that really have gone over the past 2 or 3 decades with very, very minor adjustments as they continue to look at the numbers, 4% seems to be the number. That's the rule, the 4% rule, that you really should not take more from your portfolio for income than the 4%. Now, there may be certain circumstances where it may be okay for a period of time to take more than 4%. And it also depends on where you're taking it from. Is it a personal account? Is it a retirement account? But if this gentleman was going to take 7%, the numbers, the studies from our industry clearly show that he will at some point, sooner than later, probably deplete his assets, blowing up his dreams for retirement. So be very careful about how much money you think you're going to be taking when it comes to your portfolio and what you need in retirement. Now, before I go any further, I want to ask you a question. Do you think you're prepared for retirement? Whether you're entering into it or just into it, how well prepared are you? What I want you to do is, what we offer here is, we've got a 15-question quiz on the banner of our YouTube channel. If you just fill it out, we will score it for you, and we'll give you which of the 3 stages that you are in. And once you fill it out, by the way, I'm going to give to you the first chapter of my new book and a couple of worksheets. So please make sure that you get to the quiz in our YouTube channel banner and find out how prepared you are for retirement. So the third question is, when is the best time to claim my Social Security? And this drives me nuts, particularly for when I see people come in here who already have financial advisors and they're getting the wrong advice. Now, this is very complicated, and to be honest with you, I spent 2 to 3 years really diving into this and understanding, first of all, there's 567 different claiming strategies with Social Security. You only do this once. Do you know which one is best and how to maximize it? Unfortunately, there was a study done recently, as you can see here as I take you to my own slides. Americans lose trillions claiming Social Security at the wrong time, said United Income in 2019. Why are we not getting this information out to you? It then went on to say that the study concluded that 96% of retirees choose the wrong year to tap Social Security, and that most people are better off waiting until 70 to claim, and 43% of adults actually are better off claiming before 70. The big takeaway from the study was, by claiming at the right time, more than half of retirees would see income in their 70s and 80s rise by more than 25%. So why are we not getting this information out to you? According to the Social Security Administration, somewhere in the vicinity of about 35% of you claim Social Security as early as you can at age 62. And that could cost you upwards of a couple $100,000 for your household income. It could also mean that your surviving spouse, when you pass, doesn't have enough money because he or she is going to be staked on when you originally took Social Security. There's so many different ways to think about it, and you really have to utilize the proper calculators to understand it. Understand all the variables. How much money do you have? How much income do you need? Is your portfolio in retirement or personal accounts? What are your objectives and goals, both from a retirement and an estate planning perspective? How much money are you going to take out for required minimum distributions? All of this begs the whole planning question to then determine that irrevocable decision with regards to when you should be taking your Social Security. We need to do a better job of informing you of how to think about this so that you maximize your benefit. Now, the fourth question is an interesting one. And I'll just give you the question, how do I provide for my surviving spouse, right? But what I have found with the conversations that I have had with new clients is they may have had a previous financial advisor, and the majority of the conversation has been around money management. Very little about the rest of the retirement pie, because their goal really is to just manage the money. Whereas from a retirement planning perspective, what we do with our clients is deal with so much more than that. And if we really start to probe beyond the typical questions with regards to, how much income do you need? What kind of risk do you want to take? One of the biggest concerns that keeps people up at night is providing for the surviving spouse. And I just mentioned one of the elements to that, which is claiming Social Security at the right time. Another is with regards to when to take your required minimum distributions. Do you wait till age 72 now, or do you start taking monies out a little bit earlier to lower the impact of taxes? What is, or if you have pensions available, what are the options available to you? And what will the survivor have upon your passing? And how much in the way of other assets do you have? I find all too many people who take that, if you will call it option C, where they take 50% of the pension in order to give, the surviving spouse the maximum upon when the pensioner dies. That's not always the right answer. And again, we need to be sharing with you more of that information. Did you know there was an option D, what we call a pension maximization? It may be for some the best way to take care of the surviving spouse to put in place an irrevocable life insurance trust to make sure that the surviving spouse has enough income. That's not for everybody, but are you even aware that that's available? Are you even aware that you can pursue that to make an intelligent decision as to whether or not that makes sense for you? We need to do a better job of that for you. The fifth question, do you still need life insurance? I just mentioned the life insurance with regards to one strategy for the surviving spouse. I see people who come into my office who have the life insurance policies. They may or may not have cash value in them. They may or may not be paying the premiums, but the real question is, do I really need it? And as you go into retirement, the whole objective for owning life insurance is very different. From my perspective, and again, I think that obviously, if you ask a lot of life insurance agents, they're not going to tell you not to own life insurance, right? But those are some of the folks that some people rely on, the insurance agents, to move forward with their retirement planning. And this may not be the right direction. From my perspective, independent, as a certified financial planner, to give you unbiased information, there's really two reasons to own life insurance, as I see it, in retirement. One, if your surviving spouse is not going to have enough income upon your passing, and you may take some income with you when you go, like a pension, then you may want to put up that irrevocable life insurance trust to provide for the surviving spouse. The only other reason I can think of for the life insurance is to provide for estate death taxes. Now, that may be on a federal level or a state level. But if you want to make sure that you want to pass along 100% of your estate to your heirs, then maybe, again, an irrevocable life insurance trust would be appropriate. Other than that, I'll just go to another area of insurance. The one area I think you should be looking at is long-term care insurance, but most people don't understand how to buy that properly. And we need to do a better job of offering you that information so you don't pay more money for that insurance than you should. I'm almost done here, so stick with me on this because there are really two very important issues I'm going to go over. So I see a lot of people come in from other financial advisors. And again, the conversations have dealt with really just about money management, money and income, that type of stuff. But there's one fear that really isn't talked about that much from our industry to you with regards to the transition into retirement. Now, our industry tells you that the number one fear is running out of money. Now, most of my clients, when we do the planning, we realize that based on their assumptions that they probably are not going to run out of money. The things change, no guarantees in life. Only thing I can guarantee is change. And that's why we stay on top of the planning and make the adjustments to the assumptions. But again, most of my clients, probably will not run out of money. However, there's a bigger concern. And the conversation we have a lot with our clients is, what am I going to do with the rest of my life? Let me share with you a story. I have a couple who've been my clients for probably 20, 25 years now, and they're finally retiring. They're in their mid-70s. And I asked him, I said, what are you going to do now that you're retired? He says, I don't know. He says, I could play golf 3 or 4 times a week, but other than that, I'm concerned. I don't know how to fill the rest of my time. And I turned to her and I said, so what's your concern about retirement? And she said, I don't know what I'm going to do with him. It's a real issue that we haven't dealt with, and we haven't given you enough information. We have to have more conversations about this because it's very real. As we've seen in this pandemic, it sort of gave us a little bit of a light into what retirement could be. Not being able to go to an office and being at home 24/7 with our spouse. It may not have worked out quite as well as we had wanted to. It's a peek into what retirement could be. So make sure you have those conversations and talk to your financial advisor about this. We do with our clients, and I find that most advisors fail in this area to talk about this very important topic with their clients. The final question, and it may be the most important one, how do I know if I'm on track to pursue my retirement goals? And I find again that most of my peers in this business, and that's not to say all, but many do, just focus on the money management. How do we do against the Dow or the S&P? Did the money grow? Did we, reduce the amount of taxes we should for you? But it's so much bigger than that. Because here's the question, and this is a question that was asked of a client of mine many years ago. She called me up and she said, Mark, can I do the kitchen cabinets? Now, if you know me, I don't do kitchen cabinets, okay? But what she was asking was, if I spend the money on the kitchen cabinets, if I spend the money today, will it be there tomorrow? Will spending the money now have an impact on my ability to pursue future goals? And the only way to know that answer, or to feel confident that you're on the right track, is to do the planning. The planning is actually more important than the money management, but what's the message we're getting from our industry over and over and over again? It's all about investments, money managers, stocks, the stock market. We keep bombarding you with this, but the answer really lies in the planning, not per se in the money management. But those are the conversations you have with the financial advisors. That's the information you're getting from our industry with regards to focus on money management. When the real answer is, it's all about planning. I hope this gives you some insight into some of the areas where I believe our industry has done you wrong, has not educated you properly. And I hope you will be able to take this with your current relationships with your financial advisor or talk to us about it so you can put yourself in a better place when it comes to entering into this next chapter.